Welcome to You and Your Money. I'm Jim Zahansky, Senior Managing Partner and Chief Strategist at WHZ Strategic Wealth Advisors. Let's dive into today's show.
Tariffs, trade wars, the market held up.
Well, that's the thing. We often joke about it. You came into the year with, a new president sort of promising a new golden age. And in many ways, what did that mean? So initially, we were a bit surprised and the markets were, because if you started and fell asleep in March or something, or you went down south and fell asleep for a bit, and you woke up in September, you would have found yourself really happy, right? Because the S&P is up almost 17 points.
Yep.
The emerging markets is up over 20 points, and bonds are performing at +7. So, but it wasn't that way in April. In March,
sure.
Tariffs were a bit of a surprise to the market at so much rate.
Surprise to everyone.
Yeah, because, and particularly with China, and this started some tension a bit at the time, but, tariffs were up like 145% on some Chinese goods. This really put markets in a spin a bit and brought markets close down to, on a negative basis, almost 7 or 8% in that month. So you can imagine if you were an investor and you didn't have the tenacity or the grit to stick it out, and you went to safety, you actually left quite a bit of money on the table.
Sure.
And so that's a good lesson to have, which we'll talk about.
So what about technology stocks? They've been a driver of market returns in most recent years. Technology, what's that looking like?
Yeah, this links directly to that sort of energy comment we were talking about, right? Because AI is driving tech. So if you look at some of the biggest names, in fact, the S&P 500 is a weighted index. And some, the 10 largest stocks, 7 of them are really tech. And in that scenario. And so they're driving significant growth. It didn't start that way this year, though. China was disrupting some of that U.S. growth. And this has been a fight for AI dominance. So tech stocks, you have to have them in your portfolio in some way. And you have to be willing to accept the ups and downs of that sort of higher risk. But for sure, we see this as a growth segment over the next 5 to 10 years.
Interest rates, Federal Reserve, we spent a lot of time saying, maybe this is the meeting, maybe this is the meeting, maybe this is the meeting. Then finally a little bit of movement. Tell me about that.
Yeah, the interest rate scenario is something we watch pretty closely because ultimately lower interest rates means people will have more money and likely the equities markets perform at a higher rate. We've all been debating of how, and it's highly politicized, right? There's so many headlines about the Fed chair and, is he doing a good job or this and that? But the reality is, in essence, the Fed has achieved a soft landing. What does that mean? They've we entered into a lower interest rate cycle. So we're reducing rates and we've done it without causing a recession. So we've cooled inflation. Now, not to say we're not watching inflation because we are. We expect it to tick back up over the next few months. And so they have to be really careful about how they reduce rates. But in essence, we're in a lowering cycle. So that's good news for the markets typically.
All right. So what about investors trying to plan their portfolios? Because that's what it's all about with you guys.
Yeah, it is. And that's I think the lesson, if you were thinking about the type of investor you were in your 401k, in your 403b, maybe in your brokerage account if you're not saving in a retirement account, or even in just sort of how you're managing maybe your online account. You have to think a bit about the lesson learned this year, which is it's hard to time the markets. No one would have predicted that huge drop in March or April, but you also wouldn't have predicted the reentry very well. Yeah. So if you stayed out of the market since March, you lost about a 20% upside, depending on how you were invested. So the lesson there is put money. And if the listeners are saying, hey, I'm going to consistently invest in my 401k, keep doing it.
Okay.
Don't stop.
Yeah.
Make sure you stick to your strategy and make sure your strategy aligns to your risk tolerance.
Let's get into tax planning. That was obviously a big topic this year, especially with changes coming, potential changes to the Tax Cuts and Jobs Act. Can you talk about that?
Yeah, the idea of this is another theme this year. We talked about interest rates, tariffs, right? And the other bigger policy change by this administration is what they're calling the One Big Beautiful Bill Act, or the OBBA. And I think it's yet to be determined beautiful for long term. But for those of you listening today, if you haven't necessarily thought about tax planning for next year, you really need to, because tax planning, the tax policy has improved for individuals and corporate tax rates. Seniors are getting an additional standard deduction for the next 3 or 4 years. So the tax planning has to be thoughtful. So use your CPA wisely, use your financial advisor wisely. If you haven't talked to them about it, how could you benefit from the tax policy change? I know we're talking to clients about that every day.
All right. So again, always great topics when we sit down with you guys. We just enjoy these segments so much. And again, big picture, trying to save for retirement. What's your takeaway from 2025?
Yeah,
that's
so
where we're all at.
Yeah, I mean, stay in the markets,
Yeah.
stay diversified. And one other thing that was really important this year was rebalance. So how many of you get, this automatic rebalance reminder from your 401k? Rebalancing essentially allows you in this type of market to sell high and buy low, which is what you want to do. And so if you do that, or which is rebalancing allows you to do it. It's a tool. So those are some of the basics we would say if you're listening and doing your own thing. Stay diversified and make sure that you're rebalancing when markets are high. Don't get greedy.
For more information regarding wealth management and customized financial planning with WHZ Strategic Wealth Advisors, please visit WHZwealth.com. WHZ Strategic Wealth Advisors offer securities and advisory services through Commonwealth Financial Network, member FINRA SIPC, a registered investment advisor. Fixed insurance products and services offered through CES Insurance Agency. They practice at 697 Pomfret Street, Pomfret Center, Connecticut 06259, and 392A Marrow Road, Tolland, Connecticut 06084. They can be reached at 860-928-2341. WHZ Strategic Wealth Advisors do not provide legal or tax advice. The tenured financial services team strives to support clients in achieving their financial life goals while providing absolute confidence and unwavering partnership for life.